What is good, Inner Circle team? Welcome to lesson number 4 of this mentorship. Today, guys, we're going to be covering draw on liquidity and conditions. This is by far, in my opinion, the most important lesson in the whole
I agree.
mentorship because the entry models that we give you can only go so far without draw on liquidity and without conditions. So 100% necessary that you guys watch this. If you're confused, rewatch it. If you're even more confused, just come on stage and actually talk to us and we can help you out. But yeah, let's get into it. All right, so the first thing you want to be paying attention to with really just draw on liquidity in general is your liquidity pools, right? So I'm sure a lot of you have already watched the liquidity pools video either on our YouTube or in the course that we gave out. But your liquidity pools are simply just going to be, things like equal highs, equal lows, low resistance liquidity, session liquidity, right? Time liquidity, right? Previous day high, previous day low. So all those sorts of things is going to be where you're seeking liquidity. Now, the market also moves for two other reasons, which is simply to rebalance inefficiencies and rebalance equilibrium. Okay, so this is what rebalancing an inefficiency looks like, right? Your inefficiencies are just fair value gaps, right? So, holy shit. Sorry. Your inefficiencies are just fair value gaps, okay? So, just when we have a big move up, we have strong displacement. The market likes to trade back towards inefficiencies, fair value gaps, and the second one kind of goes hand in hand. But a lot of the times we'll have a rebalance of equilibrium, and we have unfilled gaps there as well. So same thing with like the first example. If we have like a very strong displacing move lower or higher, right, the market likes to trade back towards equilibrium of that range. Now, this is simply just to fill orders, right? So you can get that through your head that the market likes to fill orders, at equilibrium. We all know about premium and discount, right? Hopefully, if we watch the ICT mentorship, this is all, the 2022 mentorship. But anyways, we go over this in the 2022 mentorship where it's just we seek liquidity, rebalance equilibrium, and rebalance inefficiencies, right? And again, this is to fill orders, right? Because we don't want to get filled all the way down here. Nobody's going to take shorts if we're in bearish order flow down here, right? Price likes to trade back into a premium and then, get a nice short. Or if we're bullish, we'd like to trade back into a discount of price. And same thing with these fair value gaps. This is just fair value of the range, right? So, yeah. Next up, we have seeking liquidity. So market also does this. We trade from this internal range liquidity to then go where? To external range liquidity. So after trading from this internal, trading from this fair value gap, we then like to trade towards buy side liquidity, seeking liquidity like equal highs and equal lows, that low resistance liquidity, relative equal highs or lows, session liquidity, and just like overall swing highs and swing lows. Okay. Does everyone understand this first part of just why does the market move? And then we'll get into how to actually find your drawn liquidity. Because this is definitely necessary for you guys to understand this first before moving on to the next spot. Yeah. Okay. So, and again, I'll wait a little bit if you guys still don't understand. You can. Okay. So, next, we have how do you actually find your drawn liquidity, right? So this is the first step, right? And this is the first question you should be asking yourself is why is the market even moving, right? Every time I'm coming into the morning, I'm like, well, why is the market moving? Are we going to rebalance an inefficiency? Are we going to rebalance equilibrium? Or are we seeking out liquidity? What is the market doing? Now, the next question you have to ask yourself, how to find your drawn liquidity, is very, very simple, and it's two questions. Number one is, are we delivering from sell side or buy side? So if we are going to have, this bullish draw on liquidity, what is price most likely doing? Well, we are going to be delivering from sell side liquidity. We're going to be disrespecting bearish fair value gaps and bearish PD arrays, bearish order blocks, right? And we are going to be respecting bullish fair value gaps, bullish order blocks, bullish PD arrays, okay? And if we are doing these things, if we're delivering from sell side, we are disrespecting bearish PD arrays and we are respecting bullish PD arrays, the draw on liquidity is most likely going to be higher, right? As long as we align this with this on why the market's moving, then you can find your correct draw on liquidity, okay? Next up, if we have a bearish draw on liquidity and draw on liquidity is most likely lower, then we are going to be delivering from buy side liquidity. We are going to be disrespecting bullish fair value gaps, and we are going to be respecting bearish fair value gaps and bearish PD arrays, right? So again, disrespecting bullish PBTrading, we're delivering from buy side liquidity, and we have a run lower. Yeah, the CST actually is a order block. It's the creation of an order block. CST and a break of structures, it's different, but it's very, very similar. Break of structure is just the wick. Talk about it. Now I learn. The break of structure is just the wick, and the CISD is the body. We'll get into that in another lesson, but for now, just yeah. Do we all understand this now? Okay, how to actually find your drawn liquidity, right? We understand first off what drawn liquidity is, why is the market moving, and then this is how you actually find it. Yeah. Okay, so I have about 5 examples that I want to show you guys from my daily bias, and overall this goes hand in hand. You need to have your correct daily bias to then go on the lower time frame and align it, right? So I'm going to show examples from my daily biases, but then also you have to understand that price is fractal. So what we're doing on the 4-hour, 1-hour time frame, if you just go down to the lower time frame and align the models, then it will become like an A+ setup. So I'll show examples of daily bias. So we can enter from CISD with the fair value gap. I think it's a valid entry. I don't personally trade that, but again, I'm not here to. I'm giving you guys entry models, but at the same time, I want you guys to create your own rules, create your own entry models at the end of the day. So whether that can be from a CIC and order block, you might not like trading inversions. I know a lot of people that don't trade inversions. I personally like it, but at the end of the day, it's all personal preference. In my opinion, entry models are not really important, and just understanding drawn liquidity is really going to be the most important. But yeah, a fair value gap, a CIC with the fair value gap is definitely a valid entry. I do that sometimes. Will we get an order block lesson? Yes. So we have a lesson. If you just go to the schedule, it's Wednesday on the 30th. So if you guys ever want to know what lessons we have coming up, we have a schedule channel. With the we just have a schedule channel, so you can go check it out there. Okay, so do we understand this? If not, we can just move into some examples. I think examples are gonna probably clear it up if you're still confused. Understand examples? Okay, cool. All right. Let's just start with today, right? I think today. Let's start with today. I don't want to go into this examples yet. I actually just want to literally show today. Well, today, actually, yeah. Or yesterday, sorry. All right, so here I had a bullish buy. So let's just read this out, right? So bullish buys come into the morning. We swept the 4-hour intermediate low inside of the fair value gap, and we have been respecting bullish PBTrading and disrespecting bearish PBTrading all overnight in pre-market, right? So I was saying, depending on how we close this 4-hour, will confirm my bias, okay? So if we close above and through this 4-hour, right, close above London highs, and through the 4-hour, I'm expecting previous day high. We also had this unfilled daily, right? So just overall higher prices. Now, why is the market moving? Okay, so the first question, again, I'm asking myself here is, why is the market moving, right? Are we moving to seek liquidity, rebalance in efficiency, rebalance in equilibrium? Well, in this case, right, we had an unfilled daily fair value gap right here. So this was an inefficiency. And we also had that previous day high liquidity pool. So we had a liquidity pool, and we also had that inefficiency, right? So 2 reasons that the market should move. Now, next up, do we all understand that first off? I don't want to move too fast and talk too fast, but yeah, that is why the market's moving. That's the first question we're asking ourselves, and that's why. Okay. Now, the next question we have to ask ourselves is, are we getting that confirmation through all of these things, right? So number 1 question, are we delivering from sell side liquidity or buy side liquidity? Where are we delivering from in this example, guys? Sell side liquidity, right? This hour 4 low. Okay. Now, are we respecting or disrespecting PBTrading? That's the next question you have to ask ourselves. What are we doing in this scenario? what are we doing with this 4-hour gap? We're inverting bearish periods, right? We're disrespecting bearish PBTrading. Okay, so if we just look over now, right? So we swept this sell side liquidity down here. We start disrespecting these bearish PBTrading, previous day high here. And what do we do at open? We disrespect this 4-hour gap. We respect this bullish order block right here as well. And then price ends up trading towards that daily fair value gap. And obviously we've been ripping since I sent this daily bias. You know, I think we're at previous week high now. So very simple, guys. This is not something you should be overthinking necessarily daily bias, but you need to be asking yourself these questions. Are we respecting bullish PBTrading? Are we delivering from sell side or buy side? And why is the market moving? There's always 3 steps really that I'm going for when I'm getting my daily bias. And then obviously when I'm going into my daily bias, then I'd like to see the lower time frame do the same thing, right? So this is just my daily bias, and this is just my draw on liquidity, right? But then when I'm going then into my lower time frame, I'm looking for this exact model, you could say, on the lower time frame, right? So I'll be looking for price to then be delivering from sell side liquidity and then be disrespecting bullish PBTrading, or sorry, bearish PBTrading if I want to get that long. And then kind of aligning your higher time frame with your lower time frame, you'll then get your A+ setup, right? Does that make sense, guys? And I need you guys to start doing this. I know I say this in pretty much every lesson, but I need you guys to please start doing this, where you write out your drawn liquidity and your daily bias in every single time, every single day. Please start doing this in your journal. If you're not doing this already, please start. Okay, so just write out your bias, write out some conditions. In this example, I didn't really have a condition because actually I did have a condition, sorry. I mean, I'm always having a condition, but this is just a very obvious bias. Even when we have super obvious biases like this, I still will have conditions. And for example here, if we end up wicking London highs here and then we get displacement back inside the range, right? So if we like take out this buy side liquidity, right, then we'll be delivering from buy side, we'll be disrespecting bullish fair value gaps, and then we start trading lower and we hold this bearish fair value gap, then we could probably expect price to draw towards here, right? But I mean, just overall, you should have like where you're leaning towards, and then you should have an if-then statement. If this happens, then I'll do this. Okay, that was the first example. You all understand the first example, all right? Cool. Okay, let's get into the next example. Okay. Yes, Garfed. There's also times where it's like not necessary. So like, but yeah, most of the time if we're like inside of like a bearish gap and I need that confirmation, I'll wait for the 4-hour. But if, for example, like if we do something like this, why is my lines doing this? Sorry, wait. What the hell? What the hell for real? If we're doing something like this, right? So we're like inside of this bullish gap, or sorry, this bearish gap to the left of us. That's like higher time frame. And then we start like on the 5-minute, let's say, like respecting bullish fair value gaps and disrespecting bearish. You can anticipate that this 4-hour is going to get inverted, right? You don't necessarily have to wait, because if we're going to be doing this on a lower time frame, we're getting that confirmation, and we are already delivering from the sell side down here. We have all of my other confluences like draw on liquidity, right? Like that previous day high in that daily unfilled fair value gap. Then you can kind of anticipate. But I think in this scenario, I did wait. So yeah, it is smart to definitely wait to see how we'll play price action out, right? Because we can definitely just take London highs and then potentially dump from here. That's obviously a possibility. Yeah. Do you look at daily 4-hour SMTs? Yes, I do. So if you had like one, yeah. It really depends, but yeah. Okay. So next example here, and again, you'll usually always see me saying I'm like leaning somewhere, or it's pretty rare, but some days I'm like completely unbiased, but I'll usually have a lean towards somewhere. For this example, I was leaning bearish coming into the morning. ES filled the new week opening gap. We got that displacement lower. We also have a bearish daily profile as well to confirm that bias. So right now I was just saying I want to see if this 15-minute gap will hold, right? And obviously as a condition, If this gap were to hold bearish and we get lower time frame confirmation out of this, then price should go towards where? Relative equal lows, right? So thinking about this right here, why is the market moving? Okay, so the market is moving in this scenario to do what? What are we doing in this scenario, guys? Why would the market be moving here? Sorry, in this example, why would the market be moving here? To go where? Are we rebalancing inefficiencies? Are we rebalancing equilibrium? Or are we seeking liquidity? We would be seeking liquidity, right? Now, if you said fill in balances, this is just like the market would be moving here to be filling in balances, but I'm saying overall, like the overall bias. Like, why would we be going higher? Why would we be going lower? But yeah, lower time frame, we would be like filling that imbalance, right? So that you're not wrong. But daily profile. So we do have a lesson on that coming up. I can link the schedule channel for you guys right here. Oops, right here. So that's the schedule channel. We do have a lesson on daily profiles in the next lesson on Monday. But yeah, if you guys are ever like confused on something like order blocks or something, we probably have a lesson on it. So yeah, okay. So in this scenario, right, we were delivering from a new week opening gap. Okay, so also we were delivering from a bearish PDR. Okay, so when I say are we just delivering from sell side or buy side, there's also times where we can be delivering from a bearish PDR. In this example, it's a new week opening gap. We filled this completely, right? After that, what is price doing? Are we respecting or disrespecting PDRs, right? Let's look over here. What do we do? Well, at open, we trade higher towards this bearish 15-minute gap. And what did I say I wanted to see? I want to see price respect this, trade lower, and then get that confirmation. And that's what we did. We ended up taking out this low. We traded lower, and we got that delivery towards London lows. Okay. Now, this is a bearish daily profile, and again, we'll get into that again. But yeah, just overall draw on liquidity was there, and that's what you really need to be focusing on. Okay, and what are we doing now from here? This is another condition, right? Now this is a condition. This is just simply after we take sell side or after we take buy side. This is something that I'm always looking for. Pretty sure Pat, are you gonna do a thing on conditions?
Yeah, I got something on conditions.
Okay, yeah. So Pat will do a thing on conditions, but basically, the best condition to have usually is just if we have a low that's been taken or a high that's been taken, and we have a fair value gap there, right? This is called like the important fair value gap. This is called the important fair value gap. Why? Because if we're going to be bearish, right, this is going to be simply a continuation model. If we're going to hold this low, this fair value gap here. If we're going to be bullish, what is price going to do? Disrespect this, and then where's the draw on liquidity most likely going to be? Well, higher. Why? Because we're delivering from sell side, disrespecting bearish, and we probably have a clean draw on liquidity higher, right? That's also something you need to be paying attention to, and that's what we did here. Where were we delivering from? London lows, sell side liquidity. What were we then doing? Disrespecting this bearish gap here, this 5-minute. And then where did price trade towards? The 15-minute intermediate high, which is a great draw on liquidity, right? This is a lot of sell stops are resting here. And we also had some nice low resistance liquidity above as well. Okay, so those are the two things you want to be paying attention to, is really just are we respecting or disrespecting. And yeah. Do you guys all understand this second example? Use any significant wicks as a significant liquidity pool. Like, it really depends, but like a fat wick will usually get traded back to like EQ of, like if you draw like the body, like the wick of this, just like the wick of this low and to the high, EQ is usually just like a great place where price likes to trade towards. But in this example, right, we would probably trade towards the overall buy side liquidity. So yeah, I mean, it is used as a liquidity pool, yeah, like a swing high or swing low. Yes, BH6. Running, bro. Had to do it. All right, cool. I think we can move on. All right. Let's get into the next example here, okay? So for this example, I said I was leaning bullish coming into the morning. Now, again, I can always have a bias where I can lean bullish one way, lean bearish one way, but is that really going to like determine my whole day? No. Why? Because I always have a condition, right? So, you know, if then statements, if price does this, then I'll do this. And for this example, I think it was a good place to have a condition. I like conditions in two scenarios. Number one is if we have a super, super obvious, you know, drawn liquidity higher or lower. Conditions are a great place to have. And then also after taking out buy side liquidity or sell side liquidity, then a condition is a great thing to have, right? So you'll just say like, okay, whatever for rally gap that swept liquidity, I'll look to see it get respected or disrespected to see where then price wants to go. And for this example, we have a new day opening gap lower, right? So if we start respecting bearish PDRAs and we start disrespecting bullish, where's price most likely going to draw towards? Lower, right? Or if we start respecting bullish, then price is most likely going to head towards that buy side liquidity. So I was leaning bullish, but I said I was leaning bullish until we hit this buy side liquidity here. Now we ended up hitting this on ES, right? So there was that SMT that got formed, and ES ends up taking out this buy side liquidity, right? So that drawn liquidity got taken. So we were then delivering from buy side liquidity, and then what is the condition? This 15-minute gap. If we break it, then expect the low resistance liquidity and new week opening gaps get hit, right? As you can see here, this is the drawing I had marked out. If we break it, expect the low resistance liquidity in this new day opening gap, and then if not, then we go higher. Now, what I'm looking at here, right? Again, going back to our questions we want to ask yourself, why is the market moving? Well, in this scenario, the market would be moving to not only rebalance inefficiencies, which is what the new day opening gap, right? We have an inefficiency being right here, but as well as to seek liquidity, right? So there's two reasons that the market is moving here. We have low resistance liquidity, right? So a bunch of sell stops resting here. And also we have to rebalance an inefficiency being that new day opening gap, okay? Now, next up, we have to find our, like, how are we going to find this strong liquidity, right? Well, we're delivering from buy side liquidity, right? We have that SMT in play with ES. And then we are disrespecting bullish PD areas and respecting bearish. Okay, so then we have open play out, and as you can see here, what do? We disrespect this bullish 15-minute gap, right? That was the condition, and then price trades towards what? The change in state delivery level here, this 15-minute order block, and then this is your bearish for rally gap as well. Gets traded to, and where do we trade towards? All that low resistance liquidity in this new day opening gap. All right. So y'all understood how I got to this bias and how I got to this strong liquidity. So if ES takes buy side liquidity before NQ, can we consider ourselves to be delivering from that liquidity? Yes, and SMT is you just have to think about it like NQ already did it. Like, it's not necessary for NQ to not take it. Yeah, 100%. Mr. Cream, it's an SMT is that's like the reasoning for an SMT. You don't need to see NQ go towards that higher low. ES already took it. Mr. Cream. Okay, so you guys all understand this? Would you be shorting against equal highs? Okay, so these aren't equal highs, right? So these are relative equal highs. If we go, when was that example? Tuesday 15th. Well, I can just zoom in here, right? These are relative equal highs, right? So these aren't equal highs. These aren't perfect equal highs. And this isn't necessary to get traded back towards, because not only do we run these buy stops here, we are also not showing that price wants to trade towards here, right? So that's a very good question, because I do often get questions like, why are you shorting against equal highs or relative equal highs? Or why are you longing against like relative equal lows or something, right? And for the example today even, right, why are you longing against a new day opening gap, right? Well, is price showing me that it wants to go lower here? Is price really showing me that? No, right? We are just continuing to what? Disrespect bullish. Respect bullish and disrespect bearish. So until I start seeing price wanting to go there, then I'll change, my bias and my conditions. But, at this example, yeah, if we were to disrespect this gap here, we weren't getting lower time frame confirmation out of this, and we didn't have, this change state delivery, we didn't have, inversing this gap, then yeah, we could probably run back towards these highs. But there's no reason to, and price isn't showing us that. As much as we want to be reactionary to the charts, as predictive we want to be with the charts with our daily bias, we also have to be reactionary, right? When we actually get into the live markets. Okay. Do you treat relative equal highs like equal highs? No. Like perfect equal highs, I will not short against, like if they're far apart. But relative equal highs, I will. But usually like the setups like this, where we already ran the stops and we already are disrespecting these PD arrays, and price isn't showing me that it wants to go here. So, yeah. Okay. So I'm going to show two more examples. Those are all just examples of, seeking liquidity. We also were rebalancing inefficiencies here. Now, this is an example with the new day opening gap, right? So you can see here how I kind of frame my bias based on the drawn liquidity being higher, and we also had that drawn liquidity being lower, right? We had the new day opening gap, and we also had the buy side liquidity above, right? So I'm going to show you that same example, basically a very similar example here, where we had a new day opening gap. And this is, pretty much exactly what happened today as well. A very similar example like today, where we had this new day opening gap. But I'm not just going to be bearish towards that drawn liquidity, right? You just have to remember there's always two steps of finding your drawn liquidity. And number one is identifying it, right? So I was identifying it here, right? We could potentially move back there if what? Why? Because we would like to rebalance inefficiencies. Okay, so that would make sense, market to move there. But where would it also make sense to go? Well, higher, right? There's an inefficiency above as well, being the weekly for value gap. So until I start seeing price disrespect these levels, is then I'll be bearish, right? But when we are just simply respecting bullish, we're clearly in bullish order flow, right? I don't really need to go more in depth of this than we are just in bullish order flow, right? It's very obvious we're going higher. There's no reason to be bearish, right? So just wait for price to tell you, and that's our weekly for value gap. So market would be moving here because we want to rebalance an inefficiency. And then as you can see here, we end up trading towards that weekly for value gap, and price respects that hourly for value gap right there, right? So just being reactive to the market, waiting for, what we want to do is like condition, right? Do we all understand this example right here? Are you guys all understanding this? Like, you guys think you got this down pretty well? I'm going to do one more example, but I just kind of want to just ingrain this in your head with like 5 examples. And this is like, honestly, the best way to help. Oh, cool. Okay. Oh, God. Okay, so finally, I'll show you guys an example of a neutral bias. And this was this was just a neutral bias. So I'll show you guys this. Now, I had this neutral bias because we had an SMT with previous day high, and we had a huge range from tariff news. So we had that daily SMT in play. So as you guys can see here, we had a daily SMT with previous day high, right? Now, next up, what do we also have? We had a huge range, right? So why does the market like to move? Well, the market likes to move to rebalance equilibrium, right? When we have a huge range where we have, a big impulse candle lower, a big impulse candle higher, the market likes to trade back towards equilibrium, right? If we're going to be bullish or bearish, doesn't matter. So in this example here, we had this huge range from that tariff news that day. And yeah, so from tariff news that day, so I was saying I can expect to rebalance yesterday's range towards EQ. So we had yesterday's range right here, right? And this is obviously a very big impulse candle with inefficiencies in it and also, that equilibrium. Now, we had an SMT with this low right here. So there are times where, if we're super, super bullish, this SMT could like hold and we don't need to trade back towards EQ because this is like enough discount for, market to move up. But I was saying, this is an example of like a condition that doesn't really have to do with fair value gaps. And this is more just had to do with like SMTs and just overall displacement in general, right? So I was saying if this were to get ran through, right, this SMT where you get disrespected and we start trading below London lows, like we get displacement through London lows, where's the market most likely going to go? Well, we have an unfilled 15-minute fair value gap right here. This is your unfilled 15-minute gap. And we also had what? EQ of the range, right? So we had EQ of the range. So this is that SMT that was in play. But if we start disrespecting this SMT and we trade through London lows, and then we get a condition like, okay, we have a fair value here, this gets respected, then we price and trade lower and get that lower time from confirmation out of that, then price should go lower, right? So what are we doing in this scenario? Again, to just really ingrain this in your guys' head, why is the market moving? Well, in this scenario, the market would be moving lower to rebalance equilibrium, right? Because we have that huge range, and also rebalance those inefficiencies that we have lower. All right. Next up, are we delivering from buy-side liquidity or sell-side liquidity? Well, we are delivering from buy-side liquidity right here, being that we swept out previous day high. And then are we respecting or disrespecting PD arrays? Well, we're respecting these bearish PD arrays at the moment. If we go to the hourly chart right here, right, we were just respecting these hourly PD arrays, and then we were disrespecting the bullish ones to the left. So if we go to then open, price respects that hourly PD array, and we dump all the way towards EQ of the range, right? Because we were just simply respecting these bearish PD arrays. We start disrespecting this SMT here. These are selling opportunities here. And that's that. That is that. Do you all understand this? With a neutral bias, how much structure do you want to see before taking a trade in either direction? So yeah, for example here, I needed to see like the 4-hour candle really do its work. So what I mean by that is if we have, let's see, an SMT here, right? And then we also have, this 1-hour gap. If I were to be bullish and I was like leaning bullish, then what would I like to see? This 1-hour gap get disrespected, right? That's enough structure for me to take a short or to take a long. And if I were to be bearish, what would I want to see happen? Well, the SMT get disrespected, right? I'd want to see this just not hold and for price to continue trading lower. Just because we had this SMT, I would just like to see this get ran through. So that would be enough structure. Right? I would like to just see how that 10 a.m. candle likes to print. So I usually wait for like 30 minutes of price action if I have like a neutral bias. Can you explain, is choppy markets in neutral bias? Not necessarily. There'll be just times where we have like, I could see price doing either thing. And I just need to wait for a price to really tell me. I'll always be like leaning one way, but yeah, I mean, choppy conditions will usually have a neutral bias though. For chopping, I'm usually going to be neutral. Because we're like accumulating price, right? You need to see where we're going to be manipulating towards, and then we'll have that distribution. Can you explain structure more? Like what exactly creates bullish or bearish structure? Yeah, so bullish structure and is just, bullish order flow. Bullish order flow is just we are delivering from sell side liquidity. Again, we are respecting bullish PDRAs and we're disrespecting bearish. So it looks exactly like this. This is what bullish structure looks like. We have, sweep of lows. We then have trade higher. We then respect for rally gaps. And it's just respecting bullish for rally gaps. And, we're disrespecting bearish, respecting bullish order blocks. Movement like this. We're leaving, relative equal highs. We're leaving equal highs. We're trading towards, imbalances. Having V-shaped recoveries up. Getting clear displacement. So an invalidation of one side's confluences. Exactly, yeah. Is 10 a.m. open normally enough to see if structure is neutral? To see structure if neutral? Yeah, so I mean, again, if there's times where 10 a.m. open would literally just like stay in the same range. Like let's say we're just still in the same range and it's 10 a.m., right? Not just because like time, but usually most of the time by around 10 a.m. we'll probably have made a move lower or probably have made a move higher, and the market will just tell me where it wants to go. When do we not have a manipulation leg? Sometimes price accumulates but then just starts dumping, pumping in one direction. Then it's most likely a manipulation leg still, just on the higher time frame, and we'll trade back towards those accumulation lows or highs. But there are times, like for example today. Well, I mean, you could even say this is like a manipulation leg. For like the long we took this morning, right? This looks like a lot of accumulation, and still it just does look like a lot of accumulation. Right, but this is your accumulation. Then we have manipulation down here, and then we have distribution. So as long as it's inside of your like key level, this is where you should be expecting distribution from. If we just start accumulating, we don't take out any low or high, and then we just start distributing, it's, you didn't miss a move. It's not like you should be like, oh my god, I should have taken that. It's like, okay, well, you just should be waiting then, because this is probably still just a manipulation move, and we'll have a buy model back up towards these accumulation zone highs. Might be an obvious question, but if the 15-minute for rally gap is respected with no candle body breaking, but there was a candle closer lower below the for rally gap, and the 1 minute is the 15-minute respected. So you're saying if we respect the 15-minute gap, we don't close above it, and then we get a 1 minute inversion lower? Yeah, that means it would be respected. Respected is just like if we get that lower time frame confirmation out. So, it depends on time frame alignment. So, I mean, I can literally just show you like what an example of time frame alignment looks like. All right, so this is just time frame alignment. If we have like a monthly PDRA, you'd want to see like a daily change state delivery out of that. If we have what you were saying, like a 15-minute for rally gap, usually a 1 minute inversion is enough of a entry in confirmation that price is getting respected. You like to use this with, to really see if we are respecting that PDRA. You want to get the alignment of that, whatever time frame it's on. For example, if we have like a daily for value gap and we get like a 1 minute change state delivery out of that, is that really confirmation that is getting respected? No, right? So definitely start implementing time frame alignment. Can you explain what you mean by what a valid open high-low closes? It seemed like last time you talked about it, the high is not valid unless it trades into a key level. Yeah, exactly. Yeah, you got it. Like, it's not going to be a valid open high or an open low unless we trade into a key level. Yeah. When waiting for an inverse, do you care at all if other candles mitigates it before that inverse? Like, no. I mean, there'll be times like, for example, today with the inversion we had was a really clean like V-shaped recovery. This isn't always how price action is gonna look. If we sometimes we'll get this 3 minute candle go here, trade lower, and then we'll invert it. So as long as my drawn liquidity is the same, as long as there's no SMTs, it's not necessary. But no, it's fine as long as it gets inverted. Usually, if it takes like 5 candles to invert, then it's like just shitty PA, and I'm probably not gonna touch it, and that's just choppy conditions.
I mean, the main thing you need to fucking just look out for with, I guess, choppy inverses is if you're generating LR as you're inversing, chances are it'll just quickly wick back and take all that LR and most likely stop you out. But sometimes it does take a couple candles to inverse, and that shouldn't really change how convicted you are unless like volatility completely dies out. Just make sure you're not generating liquidity where your stop loss is resting. That's like the biggest thing in my opinion. Should I get into conditions now?
Yeah. Yeah.
Bro, I just came across this video on TikTok. This.
What?
The mega titties all over Patty. Put them in my face. I'm the lagging acid, then I'm
This shit is so fire.
Wait, other candles as in different time frame. What do you mean by that?
Yeah, I'll give an example of generated LR in a sec. Just waiting for B to finish up.
What if there's an IFEG and we resweep the highs, but we don't make another IFEG? That's just bad conditions. That's literally just an example of bad conditions. If we start disrespecting bullish fair value gaps, for example, and then we don't deliver, and then we trade higher, and then we start trading lower again, like it's just, and we don't have a fair value gap in this leg, it's just choppy, and you should just stay out. What would you say are the most important key high time frame PDRAs? Just focus on fair value gaps. Fair value gaps.
I mean, this inversion has to be in most of the time frame for it to be. Has to inverse in most.
Does it mean the inversion has to inverse in the most of the time frame? In the most of the time frame, I think you're saying like, does the inversion need to happen on the on the fair value
Garfield, bro,
gap?
shut the fuck up.
What?
No, Garfield's just like, yeah, 1 to 5 minutes. I'm literally about to get into that, bro.
Okay, yeah, Patty can probably answer your question on that. But yeah, we trade with inversions, just really quick, we trade from the 1 minute to 5 minute. So for this example here, that trade we took today, it was the 1 minute. There was also a 5 minute. I mean, there was no 5 minute. Was there a 4 minute? No. Was there a 3 minute? Yes. So this is your highest time frame, and you need to wait for the close on this. Right? You can't look for the close. I think I know what you're saying. You can't look for the close on the 1 minute. If the 1 minute closes above and not on the 3 minute, then that's not like a valid close. Does that make sense? I think that's what you're asking. Like, it needs to close on the same time what the fair value gap's on. Okay, cool. So yeah, if we have like a 5 minute gap, you can't wait for like 1 minute to like close below it, because obviously the gap didn't close on the 1 minute, right? I mean, yeah, on the 5 minute. Okay, yeah. Am I recording here? But yeah, that's part 1 of drawn liquidity conditions. Pat's not gonna get into his